For many of us, it's a magical number, but knowing what goes into it can make a big difference. I'm, of course, talking about our credit score, and it can affect huge parts of our lives. And so joining us today to navigate this subject, we've got the one and only Tony Walls with Town and Country Credit Union. Tony, welcome back to the show. It's great to have you, my friend.
Yep, thanks for having me back again, Chris.
So let's start with the basics. How would you explain to our audience what is a credit score?
So basically a credit score it used to be called a bankruptcy score. It's basically what are my odds that I'm going to pay back my loan, and how risky am I as a borrower. So what it goes through is there's a couple different things that go into that. It's based on your payment history. It's based on your capacity, your length of credit, your new credit, and then the types of accounts or the blend of accounts you have. And we can touch on those real quick each and kind of go through what those are. And one other thing to remember too, it's just not loans. Obviously the higher credit score you are, it'll dictate what rate you actually pay. So say, Chris, you've got an 800 credit score, you're gonna be at about 3 or 4% on a car loan. If you've got 600 score, you may pay 15 to 20% on a car loan. So it's not only if you can get that loan, but how big of a risk. So obviously, the banks and the credit unions will price that accordingly. If you're high risk, you're going to pay a higher rate.
Can you say that one more time? So if I'm at 800, which by the way sounds like your math SAT score, I get what? And if I'm at 600, I get what?
So if you're at a very high score, usually top tier is 720, 730 plus on the credit score, you're going to get right now maybe 3 to 4% interest on a car loan. Now, if you have some lates and you have a very low 600 score, say a 620, you may be looking at 15% interest on that same vehicle.
Wow.
Yep. So it's almost a cycle that's hard to get out of sometimes because you're paying more. So on a $10,000 car, I use this example when I talk to the high school students when I go to high schools. On a $10,000 car at 4%, you're paying $400 a year in interest. And on 15%, you're paying $1,500 a year in interest on that exact same vehicle.
That is, man, that puts it in perspective in a hurry. So when I hear that, I think the biggest question people are going to have is, okay, so what can I be doing today to start to improve my score?
Yep. The first thing is I would say that you want to make sure that you get a copy of it. And you can get copies of those credit scores once a year at the 3 major bureaus. But the main thing that goes in is making on-time payments. It's nice to pay off the credit cards every month in full. A lot of us, especially right now, may not be able to, but you at least want to make the minimum payments. So you always want to have on-time payments, nothing 30 days or later, because a 30-day late can drop your score 60 points in one move. So it can drop it from a 700 to a 640 overnight by one little 30-day late payment. And it might have been one you forgot. You might have $50,000 in the bank, but if it's a late payment, it's going to affect your score.
Man, that is shocking. I mean, because I know a while ago I had like a doctor bill that I didn't even know about. And I mean, so if there is something on there and it was like $20, so clearly I could have paid it, then how do I go about getting that taken off my score? And does that automatically increase it then once it comes off, or how does that work?
Great questions. So on something like that, it's basically a collection and not a late payment. So the collections will hurt you as much as a late payment, and that can drop you 60 points. Now you can dispute that and they can see if they can get that collection off. Unfortunately, if you're late on a payment, it's called the Fair Credit Reporting Act. Say you had a credit card with us, Chris, and you were late and it was an accident, but if you're late, we have to report that as 30 days late. So unfortunately, that's going to stick on your credit report, unless it was a bank or credit union error.
Man, so and Tony, we got to wrap it up real quickly. Even in the time of COVID, can I call, like, for example, call you guys and go, hey, I can't make these payments because of COVID. Are you still going to give me the 30-day late thing now or no?
Well, if you negotiate with either your mortgage company or credit card companies, they're going to do either forbearance or a skip pay, and that will not show up.
Okay.
And like on the last show we talked about, you want to make sure you stay ahead of the curve. So call them before you know you're going to be late, because once you're late, you're late. But a lot of times in these times, they can work with you to make sure that it doesn't go on as a late. Great question.
Man, Tony, it feels like we just scratched the surface. So next time we have you on, let's stick on this topic, okay? And we look forward to having you back, all right?
Sounds great.
Thank
Thanks.
you, sir.
Hopefully I'll be back in the studio. Things get better.
I hope that's soon, man. So enjoy your day, my friend. All right, stick around. We got much more coming up right here on North Dakota Today.